Welcome dear friends, in this video we will solve objective part of CSS Accountancy and Auditing Paper 1 of the year 2026. Assume a company has a rupees 350 credit, not cash sale. How would the transaction appear if the business uses accrual accounting? Rupees 350 would show up on the income statement as a sale. Which of the following is not an example of capital expenditure? Paying carriage outwards in respect of selling goods. Mahnur invests her car into her business. Which parts of the business accounting equation will change? Assets and capital. Which of the following errors would be found by extracting a trial balance? Different figures have been entered for the debit and credit entries. Working capital is an indication of the firm's liquidity. Which of the following principles matches expenses with associated revenues in the period in which the revenues were generated? Matching principle. If the existing current ratio of a company is more than 1, what would be the impact of a credit purchase of inventory on the current ratio? Current ratio would decrease but would remain higher than 1. Which financial statement represents the accounting equation? Balance sheet. The original cost of the machine is rupees 19 lakh. Machine installation charges are rupees 1 lakh. Working life of the machine is 5 years and residual value is rupees 40,000. If the depreciation is charged on straight line basis, the 4th year's depreciation will be rupees 3,92,000. Amount set apart to meet loss due to a bad debt is provision. House building advance of rupees 2 million paid to employees. It is a asset. Prime cost may be correctly termed as the total of all cost items which can be directly charged to product units. The costs are differentiated between fixed and variable cost under marginal costing. From the following information, find out purchases when raw material consumed is rupees 26,500, closing stock is rupees 4,500 and opening stock is rupees 3,000. Rupees 28,000. If an adjustment includes an entry to accumulated depreciation, what type of adjustment is it? Estimate. A company's statement of profit or loss for the year ended 31st December 2025 showed a net profit of rupees 83,600. It was later found that rupees 18,000 paid for the purchase of a motor van had been debited to the motor expenses account. It is the company's policy to depreciate motor vans at 25% per year on the straight line basis with a full year's charge in the year of acquisition. What would the net profit be after adjusting for this error? Rupees 97,100. At 30 June 2025, a company's allowance for receivables was rupees 39,000. At 30 June 2026, trade receivables are rupees 5,17,000. It was decided to write off debts rupees 37,000 and to adjust the allowance for receivables to the equivalent of 5% of the trade receivables based on past events. What figure should appear in the statement of profit or loss for the year ended 30 June 2026 for receivables expense? Rupees 22,000. Nishat Textiles computed the following items for its financial records for the current year. Current ratio is equal to 2 to 1. Average age of inventory is equal to 60 days. Average collection period is equal to 30 days. Average payable period is equal to 40 days. The number of days in Nishat Textiles cash conversion cycle for the current year was 50. Ideally, which of the following ratios will indicate the highest return for a levered firm? Return on common equity. Given a quick asset test ratio of 2.0, current assets of rupees 5,000, inventory of rupees 2,000, prepaid expense is equal to 0, the value of current liabilities is rupees 1,500. Thank you for watching this video. Stay blessed.